Matt, the mortgage guy here. Want to record a quick video to talk about how much does it cost out of pocket to refinance your home loan. I've gotten this question quite a bit, and we are in a season where refinance is a popular thing to do for one reason or another, whether that's lower your payment, whether that's shorten your term, whether that's cash out for some home projects you've been thinking about doing so that you can school from home, work from home, gym from home, all that stuff. But even if we're in the future and we're past COVID times, and we're not talking about that, people are refinancing by the droves. And the common question is, how much is this going to cost me? And the question I get even more often is, how much is it going to cost me out of pocket? Because there is a difference, right? I show people, here's exactly what this loan costs you. Even if it gets rolled into the new loan and you're not coming out of pocket, it's still a cost. And that's how people should be analyzing their refinances. What are the total loan costs? What's the benefit to me? How many months is it going to take to recoup that loan cost? How long do I plan to stay in the house? If I'm going to recoup the costs in 14 months and I plan to stay in this house for 5+ years, it's a no-brainer. It's a refinance that you should proceed with. If the cost versus the benefit is 38 months and you think you might move in 2 years, you might want to reconsider. So the answer to the common question is, generally speaking, people are going to roll the costs of the refinance into their loan, and the only out-of-pocket fee that you're going to pay is an appraisal, in parentheses, if needed. A lot of people are seeing appraisal waivers. On the refinance stuff we're doing, I'll probably see 75% appraisal waivers. What an appraisal waiver is our automated system, once we put all the information into it, saying, you know what, I'm confident this property's worth at least that. No need to get an appraisal. And so we just don't need an appraisal. In that scenario, zero out of pocket if you choose. Now, the 1055, that's a flat fee to the lender, the title fees that are $1,200-ish, a couple other little miscellaneous fees might total $2,500. Those will get rolled into the loan 95% of the time. Now you can choose to pay them up front if you want to, but more often than not, you've got a current loan that's got a $300,000 balance. We order the payoff and they get paid off. Then you've got those $2,500 in loan costs that get rolled in, plus you're going to prepay some taxes, you're going to prepay homeowner's insurance to set up those new escrow accounts. That's another $3,000 that gets rolled in. So your new loan is $3,500. Prepaid escrows, loan costs, right? You follow me so far? Some people that are like, gosh, I don't want to owe $5,500 more than I did before. Well, here's something you can do. You're going to miss a mortgage payment, and let's say that mortgage payment's $2,000 a month. You're also going to get a refund of whatever's sitting in that escrow account at the old lender. Let's say that's $2,500, $3,000. Take that $4,500, $5,000, apply it directly to the new loan. All of a sudden, you're back pretty close to that $300,000 you owed to the old lender. And that's the way, granted, a lot of people aren't really that concerned. They don't plan on paying it off anytime soon. So $300, $3,055, it doesn't really matter to them. But if it matters to you, that's exactly what you do. And so, I've got plenty of videos out there. I've got videos where I walk through specific refinances and show you line by line. But that's what you should be looking for. Know that if you're talking to some of these online lenders that are promising these crazy rates, they will offer that crazy rate, and it's such good marketing because you don't look at the fine print, you just get lured in by that rate and you just walk in like a zombie, or you answer the phone and you're not even listening to anything. You just hear 2.25%, 30-year fixed, woo! 3 points of cost. $9,000 is in box A. You're paying 3 points for that rate. It's going to take you 9.5 years to break even on the savings you're going to see from that. That's the kind of stuff that's getting rolled in, factored into loan costs. Scenario I'm talking about is $2,500 loan costs where there's no points. That's generally where you want to be, but that's plenty of other videos I've put out on that. This specific video is just to say $450, $475, $500-ish for an appraisal, we'll send you a link. You pay with a credit card, you pay with a debit card, and that's your only true out-of-pocket expense. The rest can be rolled in, or they can be paid up front if that's what you prefer. So hope that answers questions. I know that, at least for the next 12 months, we're gonna see super low rates. There's gonna be tons of people refinancing, so there's gonna continue to be thousands of questions about refinance. If you'd like to comment on this video, answer as many questions as I can, the best I can. If you're in California, I'm happy to help you, and I'm licensed in California. If you're in another state, I can give you good advice. I can refer you to a mortgage broker who aligns with how we do business, serving people at the highest level. And so they're gonna take care of you, and if they don't, you're gonna let me know, and I'm gonna plus their backside and never refer them another deal ever. I'll probably blast them in some of these broker forums. But besides that, Matt, M-A-T-T, at Matt the Mortgage Guy. Shoot me an email. I'm happy to help. Thanks for watching.